Good morning, ladies and gentlemen. Welcome to the show. And listen, I'm glad to have you guys here. Today is July 26, 2019. And if you watch my show, in previous shows going back quite a ways, I was talking about something I call a deflationary spike event. What that basically is a sudden downturn in the markets, uh, basically chaos within the financial system, because it's deflation. It's like what happened during the Great Depression in 1929. But they won't allow the system to roll over. They won't, because now what they've done is they've expanded credit out so far, and they've blown up so many bubbles. If the whole thing were to collapse, like in 1929, it would destroy the entire. Everything would go down. They won't let it happen. So when it'll. What this deflationary spike event would do is it would start and it would proceed for a number of days. And as it grows and intensifies, they would step in to bring it to a stop. So let's take a look. Let's get the chart started, and let's take a look right here at this article on Zero Hedge real quick. It says the downturn could be particularly brutal. The first Fed cuts are not bullish, and what they're talking about is how the market. It says U.S. equity markets. The downturn could be particularly bullish for brutal for U.S. stocks, because we are record late in a fading economic expansion, and at historical high valuations relative to underlying fundamentals across a broad composite of 8 measures that we follow at Crescat. Now listen, here's the thing. They've blown up huge bubbles, and the stock market's one of the biggest bubbles of all. They're behind the curve, the Fed, right now. So this deflationary spike event I talked about for a long time, when the Fed started to turn dovish again, now of course it's only been talk, but it started to take away some of the what's required to have this sharp economic downturn. But the Fed hasn't really done anything. And now they're behind the curve. Now they're going to start to try to cut rates. But because they're behind the curve, we could still get, in fact, more probability than ever that we're going to get this shocking event, this downturn, which is deflationary, which would mean that thousands of points could peel off of the Dow Jones and all of the stock markets worldwide. And at the same time, this could affect bonds. What they're going to have to do is they're going to have to come in with monetary stimulus. It's the only way out of this. We're moving into really troubled times right now. This is a situation that, if this event comes into play, what it's going to do is it's going to force the hands of the world's central banks to react to it. And right now, they don't want to react. They're digging their heels in. They want to trump about this economic recovery that's going on. It's not real. And then later, now as it starts to turn downwards, they keep saying what strong economies they have. That's all just talk. The real truth is we are in the late stages right now. This fading economic expansion. It's fading now, and it's getting ready to fall off a cliff. So we could very well get this deflationary spike, what I call deflationary spike event, which is a sudden onset. It wouldn't take much to trigger it, really, at this point. Because we're just like we were in 1929 after a 10-year massive expansion, and they blew the stock market into a bubble. Same thing right now. Let's take a look, and let's start the charts and take a look at the silver price today. And we're seeing gold and silver starting to react. Silver 16.45 bid, 16.55 ask. It's up 8 cents on the day, but it's still in the middle of the range. It was higher. It did make its way up to like 16.60, and I don't think that I think we're in the beginning stages of a bull market. It's going to be a long, very long bull market in gold and silver. What's happening in cryptocurrencies today is we're seeing that the market cap's 272 billion. Basically, nothing's happening in cryptocurrencies for the last few days. It's going along sideways. We got a lot of sideways movement here, and this is going to continue, I think, for a few more, at least probably a couple more weeks or thereabouts, till the end of July anyway, when the Fed goes ahead and starts to cut rates by 25 basis points, which is going to be bullish for gold, silver, and cryptocurrencies. Let's take a look now at the Dow Jones. It should have started yet, and we're looking at 16 points up today in the day so far. The higher she goes, well, the old saying, the bigger they are, the harder they fall, you know? And so the higher she goes, the more precarious position it's getting itself into, because it's in a bubble. Let's take a look now at oil prices. See, oil prices are up 20 cents on the day. Let me see if I can get the one-day chart. There we go. There's a one-day chart. We see a slow increase. It's up 20 cents on the day so far, or is it 29 cents? I should have my glasses on so I can see a little bit better. 29 cents, I think, on the day. 0.5% it's up today, oil so far. Let's take a look at U.S. Treasuries, see what we got here. Now, the Treasury yields are a little bit of a mixed bag. The long end of the yield curve is just falling a little bit, but the middle of the yield curve is rising. We're seeing the biggest change in the 2-year. It's up over 1 basis point, but not a lot of movement in the bonds today. It's kind of like today, so far. We have to wait later in the day and see exactly what happens. Now let's take a look at the U.S. dollar index. It's been steadily rising. It's getting up near 798 points on the U.S. dollar index. You have to understand something. It's a basket of currencies. They're not comparing the U.S. dollar index against its buying power or its purchasing power, which is actually decreasing. No, what it's being compared against for the most part is the euro. And so the reason why the dollar's rising is they're going very dovish over the central banks are into monetary stimulus. And Europe is crumbling. Listen, I want to talk to you guys for a second. It's getting toward the end of this report. I'm gonna switch the charts off, and I'm gonna talk to you guys. Just talk to you guys for a minute. It's very important that you understand that the center of the crisis that's coming is going to be centered in Europe. I'm fully expecting food distribution chains. People, they think, honest to gosh, people think that the food magically appears in a grocery store because they got so used to it. All their life's been that way. Anytime you need some food, you go to the grocery store. Their food is all stacked nice and neat on the shelves. You just grab a bag of whatever you want. Pay them the money and you're out the store. Anything you want, any time of day. We've had this our whole lives, especially in Europe. A lot of the people in Europe feel very privileged, and they should feel privileged. They've been privileged. We've been privileged over here. Everything's about ready to change. The food distribution lines in Europe. Why the crisis is going to be so bad in Europe is we've got all these fragmented little countries that make up the whole of the European Union. What I mean by fragmented is they don't realize it, but by being in the European Union, being member states, they're actually not coming together to form. This is the grand idea of what it should be, but this is not the way it really is. What it really is, and what it was before the European Union was in place, where these were all individual countries. Well, ultimately, where this is leading in the end is a financial crisis. It's going to impact those little countries, and they're going to become sovereign states again. They're going to become back to what they were before they joined the European Union. This is what's coming down the pike. And when this occurs, when the European Union dissolves, and it leaves these little countries isolated, what's going to happen is food distribution lines are going to start to be cut off, because what they've been relying upon all this time while they've been in the European Union is they ship food from one country to another country through these borders and stuff. But when these countries become sovereign again, these food distribution, they're going to have to rely upon their own country. You know, I'll use Italy as an example. They're going to have to rely upon their own country's food production, because these other countries are going to have their own set of problems. And what's going to happen is inner border between these borders and stuff, which been flowing freely. Well, it's like this. If a person were to get live all their lives, but they start to get old and they get a condition where they get blood clots in their legs, you know? What happens if they form a blood clot in their leg? Well, the blood doesn't get distributed to their foot. Their leg turns all white because it's got a clot in there. It's stopping the blood from going through. And that's what this will effectively act as if we get this kind of chaos in Europe caused by the financial crisis and the euro not working anymore as a currency, basically. What we'll see is we'll see food distribution get cut off. Just like the circulation to the leg gets cut off. And they're going to have food shortage in Europe. But not an ordinary food shortage. This is going to be massive all across Europe. It's going to lead to possibly millions of people having to do without. Okay? So, over here in America, what's it going to look like over here when this thing hits? When Europe falls into this chaotic period of this crisis, what's it going to look like in America? It's going to cause a crisis too, but it's going to be a little bit different. Over here, what it's going to do, over in the Americas, I'm talking about Canada and America, Mexico, over here, what's going to happen is we're going to see an exponential increase in homelessness. And what's going to cause that is effectively we're going to have a very profound period of stagflation where we get rising prices on everything with a declining economy. And so what this basically does is it takes the middle class people and it sucks all the money out of their pockets. Because you got food prices rising, rent prices rising, prices on everything rising exponentially. Your salaries is not rising, and at the same time, you got job cuts and layoffs that are going to be going across America like crazy. And so people just ain't going to be able to make it fit it together, you know. And what the end result of this is they're going to start losing their homes. And I'm not talking about people that are on drugs or anything like that. Which is what we have a lot of homeless now. This is going to be a different situation. These are going to be ordinary middle-class people who had a home, and now they've lost it. They couldn't pay the bank or whatever because they just couldn't make ends meet. They're going to find themselves on the street. And we're talking about massive amounts of people. Well, right now the way it is you've got a lot of people out there who are right now working, they're paying their mortgage, they've got a nice car, you know, and everything else. And they feel fairly secure. They've got money in the bank as dollars, right? And they're doing all right. They might see homeless people in their neighborhood right now, and they're like, what are those people doing in my yard? Get them out. We don't want them in our neighborhood. And this is the way they talk. But in 6 months or a year from now, these people that are talking that way might find themselves homeless. Then they're going to realize how the homeless people are pushed from one place to another. How it's always like, you can't stay here, you have to move. And so they move to a different spot, and then the police come along and say, you can't stay here, you're going to have to move. Well, it's going to come to a situation where that's the way it is right now. But when this new flood of homeless come in, I'm talking, the numbers rise tenfold, 20-fold from the amount there is now. This is going to be the effect of this crisis on America. And they're going to form cities. This is what's going to happen. Right now we got homeless encampments. These encampments will exponentially grow. And what we're going to see is we're going to see homeless cities. Whole cities. or whole cities taken over by the homeless. Because ultimately, where do they go? And it's going to be massive amounts of homeless. That's what we're going to see. But now, what about the people who are able to keep their jobs through this? They're going to find that their way of life is going to be diminished. In other words, they're going to end up maxing out all their credit cards. They're going to end up to try to keep and hold it together and stay in their home. They're going to keep working at their job, but they're going to find that their salary doesn't last the whole month anymore. Or if they're paid weekly, it doesn't even last the whole week. You're going to get paid, and you're going to find that halfway to the next time you get paid, that your money's all gone. And they're going to be scrounging around the house for change to buy a jug of milk while they're waiting to get their next paycheck. But they're going to still be in their home because they still have their job. And they're not homeless yet, but they're going to feel threatened. They're going to feel very vulnerable. If I lose my job, I'm going to be homeless. This is the way they're going to feel. And so what's going to happen is as this thing progresses, and as we move deeper into the hyperinflation, it's only going to get worse and worse, and the people are going to start at a certain point to blame government for all of their problems. The massive amount of people. Now, the way government thinks is they think we make the rules, the people follow the rules. This is basically the way government thinks, you know. In this situation, government's going to realize at a certain point who the real boss is. They think they're the boss. They think, oh, well, we're the boss. We're elected policymakers. We're elected lawmakers. We're the boss. That's what they think. But they don't realize is the real boss is the people. But that quiet, that silent majority out there normally remains silent and accepts everything that the government, all of the garbage, complete garbage that the government gives them and says, okay, you got to do this, you got to do that. They accept it all, and they're basically very meek and humble, and they do as they're told and everything else in normal circumstances. But this is not going to be a normal circumstance. In the end, this is going to lead to people actually fear. They're going to see all of these homeless people, homeless camps springing up everywhere, and they're going to realize that their job is just barely keeping them off the street. And they're going to realize, hey, you know, what if I get laid off? And they're going to get frightened. The people that still have their jobs and stuff. And what's going to happen is that fear stimulates the majority that's normally silent into action. They become then vocal. And what happens is when they start to get so that they have to go hungry, say their paycheck doesn't, they're scrapping around the house for change, and say they run out of change and they can't buy a pack of cigarettes, or they can't go down to the corner store and get the milk, and they have to spend, while they're waiting the last 2 days before they get their pay each month, they have to go hungry and their kids have to go hungry. This is the world we're facing in the very near future. What can set it all off is this deflationary shock event that's really close now. Okay, I've rattled on a little bit this morning, but we're heading for a world in crisis. It seems like everybody's getting upset with everybody else because we're starting to go into the first initial stages of this thing. And everybody's fat and happy when you're inflating the bubbles. Everybody's making money, everybody's fat and happy, but when the bubbles start to pop and everything starts to reverse like it's doing right now, what happens is anger starts to go out into the general world, and suddenly you see countries becoming angry and wrathful at other countries. And you can see that effect just last night. Ukraine, they seized a Russian tanker. Okay, you can see that effect. Venezuela, there was a U.S. aircraft flying through just a couple days ago, and they were, I guess, shadowing it with a fighter jet. You can see what's going on over in Iran. You can see all these situations in the world. The world is flaring up because we're starting to go into the front side of this thing. This credit expansion is ending. The central banks are behind the curve. It was the biggest mistake in the world for the Federal Reserve to decide to actually raise interest rates in the weakness, which is what they did. Now they're behind the curve. They're getting everything wrong. They were the ones who caused the Great Depression in 1929. And now, what can I say? They're doing it again. Listen, thank you guys for listening. I know this has been a little bit of a long market report. But for you guys that's followed me to this point, thank you very much for listening and give me a thumbs up. And I really appreciate you guys. Really. Bye-bye, guys.